Michael Drozd, Chief Investment Officer at LaSalle Street. This is a view from the street, our market and economic recap for September. Let's go ahead and jump right in. September was a month of modest gains for global equities. Investors were encouraged by moderating inflation and easing monetary policy. Despite ongoing concerns of economic growth and potential risks, equities edged higher. The S&P 500 reached an all-time high, rising 1.5% after the rate cut announcement, ending the month up over 2%, while the Nasdaq 100 and Russell 2000 posted strong gains, both up over 2% for the month. International equities also saw a positive month, rising over 2.4% for the month of September, highlighting the importance of diversification within global equities. Turning to the bond market, corporate and municipal bonds experienced a mixed month. While corporates benefit from declining interest rates, municipal bonds faced modest pressure due to concerns over local government finances. Overall, the bond market remains stable, while investors keep a close eye on the Federal Reserve's next moves. On the economic front, the latest data supported our case for a resilient economy. Consumer spending remained robust, supported by a resilient labor market. However, manufacturing activity and the housing market showed signs of cooling, reflecting broader global economic uncertainties. A significant development this month was the Federal Reserve's decision to cut interest rates by 50 basis points. This move, aimed at sustaining economic growth, brought the benchmark rate down to a range of 4.75% to 5%. Additionally, China unveiled a major stimulus package to boost its slowing economy. This included cutting the reserve requirement ratio and providing substantial liquidity to financial markets. Given China's weak consumer and real estate market, authorities may need to increase accommodative measures in the future, potentially boosting Chinese equities in the process. We remain cautiously optimistic until this actually happens. Emerging markets reacted positively to the Chinese stimulus package, with the MSCI Emerging Markets Index rising over 1.8% for the month. The Shanghai Composite Index surged over 8%, its best day since 2008, and it ended the month up over 17%, its best monthly performance going back to 2015. As we look ahead, increased stimulus measures both domestically and internationally could provide a boost for investors. Despite seasonal weakness and geopolitical uncertainty, the FOMC's expected rate cuts in November and December, easing financial conditions, robust earnings, and potential liquidity injections as a result of the U.S. approaching the U.S. debt ceiling may actually prove to be a tailwind for risk assets going forward. Overall, September was a month of cautious optimism in financial markets. And while volatility may increase as we head towards the presidential election, the overall backdrop remains positive for risk assets. Thanks for watching, and be sure to tune in for the next market update.